My name is Austin Polk, and for my analysis I'm going to analyze two different industries with 5 companies each to determine which company within each industry is the best investment and then which company is best across both industries. The two industries I analyzed were the automotive industry and the oil and gas industry. The 5 companies chosen from the automotive industry were Audi, BMW, Daimler, which is the owner of Mercedes-Benz, Fiat Chrysler, and Mitsubishi. And the 5 companies chosen from the oil and gas industry were ExxonMobil, Chevron, ConocoPhillips, Hess Corp, and Marathon Oil. The first thing I analyzed were liquidity and leverage ratios for each of the companies within the automotive industry. We can rank these in terms of liquidity from most liquid to least liquid. Audi is the most liquid due to the fact that it has the highest current, quick, and cash ratios, with Fiat Chrysler coming in second place, Mitsubishi, Daimler, and then BMW taking 5th place. Also in this table we can see the company's debt to equity ratios. It's easily seen that Audi is the least levered because they have the lowest debt to equity ratio at 8.55, whereas the next lowest debt to equity ratio is Mitsubishi at 81.61. The best company in terms of liquidity and leverage has to go to Audi. After liquidity and leverage, I analyzed their asset efficiency ratios. In this table, we can see that Audi again takes the lead with inventory turnover. However, it falls to second place in both receivables turnover and total asset turnover. However, consistently, Audi beats the other 4 companies in efficiency with assets because the companies that did beat Audi were 2 different companies. Fiat Chrysler was ahead of Audi in receivables turnover. However, Fiat Chrysler was behind Audi in both inventory turnover and total asset turnover. And the same applies for Mitsubishi. Yes, Mitsubishi had a higher total asset turnover, but it was again behind Audi in both inventory turnover and receivables turnover. Audi ranked in either first or second place, whereas the other companies did not. So the winner for this category was again Audi. After looking at the asset efficiency ratios, I conducted a ROE decomposition to determine not only which company had the highest return on equity, but what was driving that return on equity. In this table, we can see that Audi does in fact have the highest ROE at 28.98%, but what's driving that return? Among the other companies, Audi has the second highest tax burden, with Fiat Chrysler taking first place on that one, the highest interest burden and operating margin, the second highest total asset turnover, again with Mitsubishi taking the lead for that one, and the lowest equity multiplier. The next highest ROE is Mitsubishi at 22.29%, and they had a lower tax burden, lower interest burden, a lower operating margin. They did have a higher total asset turnover, but they also had a higher equity multiplier. And due to these reasons, Mitsubishi still has a lower ROE because of all the other components combined. Due to all this, Audi is also the winner of this category. After the ROE decomposition, I reviewed each company's capital structure. In this category, Audi did not dominate like all the other categories. BMW had the lowest weighted average cost of capital. Audi has the highest return on invested capital. Daimler Auto had the highest dollar value of economic value added. But Audi did have the highest EVA spread, meaning that in proportion to size of the companies, Audi had the largest economic value added. It was a little more difficult than the others, but again, Audi was declared this category's winner as well. The next thing I analyzed were each company's enterprise value multiples. Even though Daimler Auto had the highest dollar value for both enterprise value and EBITDA, BMW had the highest multiples, which showed that BMW had the better valuation proportionally. So for the first time, Audi did not win. This category was in fact won by BMW. For this category, I looked at each company's price to earnings ratio. Out of all 5 companies, Daimler had the highest PE ratio at 8.24. This represents the growth potential of the company. The next best company in this category is BMW, who has the highest market value to book value ratio, indicating what the public feels about this stock. However, for this category, I gave it to Daimler. For the automotive industry, I came to the conclusion that Audi was the overall winner for this industry, due to it having considerably higher liquidity than the other 4 companies in the industry, having lower leverage than their competitors, consistently ranking among the top in asset efficiency, having the highest return on equity, and having the highest EVA spread in the industry peer group. After analyzing the automotive industry, I moved on to analyze the other industry that I picked, the oil and gas industry. The first thing I did was rank them in terms of liquidity from most liquid to least liquid, and came to the conclusion that Hess Corp was the most liquid due to having the highest current, quick, and cash ratios, followed closely by Chevron. Then I moved on to the leverage ratio and found that Chevron had the lowest debt-to-equity ratio, followed closely by Hess Corp. So for the overall winner position for this category, I gave it to Hess Corp. After reviewing the liquidity ratios for each of the companies, I analyzed their asset efficiency ratios just like I did for the automotive industry. ConocoPhillips had the highest inventory turnover ratio, but ExxonMobil dominated the other 2 positions. So for this category, ExxonMobil won. For the ROE decomposition, we determined that even though ExxonMobil had the highest return on equity at 15.53%, Chevron was in fact the best company based off of this category. The reasons for this were having the second highest return on equity, but the lowest equity multiplier. They had a fairly high tax burden, a very high interest burden, as well as the highest operating margin. So for these reasons, we gave them the winner position. After looking at the ROE decomposition, I reviewed each company's capital structure. ExxonMobil does have the lowest weighted average cost of capital, and they also have the only positive return on invested capital. Then looking at their economic value added, all of the companies had a negative economic value added. However, when I looked at the economic value added spreads, I noticed that ExxonMobil did in fact have the highest one at a negative 6.07%, with the next one being Chevron at negative 11.21%. So for this category, I gave the winner position to ExxonMobil. After reviewing each company's capital structure, I moved on to analyze the company's enterprise values. ExxonMobil does in fact have the highest enterprise value and EBITDA numbers. However, when you go in to look at the multiples and the ratios, we see that Marathon Oil actually has the highest, which means in proportion to their size, Marathon Oil has the highest valuations based off their size in comparison to the other 4 companies. So for these reasons, Marathon Oil was declared the winner of this category. Finally, the stock prices were analyzed for each company. ExxonMobil had the only positive price to earnings ratio, which already put them on the top of the list. However, upon reviewing the theoretical prices predicted by the dividend discount model, it was determined that all 4 of the other companies are overvalued, whereas ExxonMobil is undervalued. Their stock price is currently $87.04. However, the dividend discount model says their theoretical price is actually $129.53. Whereas if you look at the other companies, for example Chevron, they're selling at $113, whereas the theoretical price is only $52.71, saying that they are in fact overvaluing their stock. Based off of this data, ExxonMobil was also determined to be the winner of this category as well. For the oil and gas industry, ExxonMobil was named the overall winner based on having the highest level of asset efficiency, having the only positive return on invested capital and the lowest weighted average cost of capital, having the only positive PE ratio and the highest market value to book value multiple, and being the only company considered to be undervalued among the 5 companies in the peer group. After analyzing both industries, I analyzed the winning companies from both to determine which company was the best investment across industries. So like I did for the other 2 industries, I ranked them both in terms of liquidity from most liquid to least liquid. It's very clear to see that Audi is in fact the most liquid due to the fact that it has the highest current, quick, and cash ratios out of the 2 companies. However, when we look at the debt to equity ratios in terms of leverage, it's the exact opposite. And ExxonMobil has drastically lower leverage than Audi does. So even though they do have lower leverage than Audi, for the liquidity leverage category, Audi was declared the winner for this one. In terms of asset efficiency, it's clear to see that once again Audi won due to the fact that they do have the highest receivables turnover and total asset turnover. Even though ExxonMobil does have the highest inventory turnover, we can say that Audi is more efficient when it comes to assets. Like with the industry analysis, we did a ROE decomposition. Even though Audi has a higher equity multiplier than ExxonMobil does, all of their other multiples are fairly close. Even if Audi's equity multiplier was equal to that of ExxonMobil's, they would still have a higher ROE due to the fact that there's such a large gap in return on equity. So for this category, Audi was again declared the winner. After reviewing the ROE decomposition for both companies, I compared their capital structures just like I did before. As we can see, Audi does in fact have the lowest weighted average cost of capital at 5.4% compared to ExxonMobil's at 7.9%. Return on invested capital, again we see Audi having the highest one at 9.58%, with ExxonMobil having just 1.87%. Then when we get to economic value added, Audi actually is the only one that has a positive EVA, whereas ExxonMobil has negative 14,000. And the EVA spread, unlike how it was in the oil and gas industry, where ExxonMobil had the highest, even though it was still negative, Audi does in fact have a positive 4.22% EVA spread. So for this category, it was very simple and Audi definitely won this one. The enterprise values for each of these companies were analyzed as well. This was probably one of the easiest decisions to make to see which one was the best in terms of enterprise value. ExxonMobil does have the highest enterprise value and the highest multiple. In the oil and gas industry analysis, ExxonMobil did also have the highest enterprise value and EBITDA numbers. However, in proportion to the other companies, they did end up losing due to the fact that their multiples were not the highest. However, that's not the case here. They do in fact have drastically higher numbers than that of Audi, so it was very easy to declare them the winner for this category. And finally, I compared their stock values and the related multiples. ExxonMobil does have a higher PE ratio than Audi does, and a higher market value to book value ratio, which that alone made me give ExxonMobil the winning position for this category. After comparing across industries, it was very clear to see that Audi was the best company to invest in overall due to being the most liquid out of the 2 companies, being the most efficient with managing assets, having the highest return on equity, even with having a higher equity multiplier than ExxonMobil, and having the lowest weighted average cost of capital and the highest return on invested capital, along with their positive economic value added and economic value added spread. It was very clear to see that the overall winner was in fact Audi. Even though Audi was determined to be the best company to invest in, we do sometimes have to take into account the amount of money being invested. If the amount of money invested is taken into account, ExxonMobil would be more beneficial to invest in due to being able to purchase more shares due to the lower stock price. However, if money is not an option and it's not being taken into account, Audi is the most beneficial based off this analysis. Thank you.